Welcome back. I'm Joe Elkier here with Tim Murphy. This is the Gold Spot. Tim, as your article this week mentions, we're kind of in a position right now where we're short-term bullish and long-term bullish on precious metals. The geopolitical situations that are kicking up around the world, there's lots happening. Also, it appears that we've kind of hit a low in the gold price last week at about 1810, and there's potential for a short squeeze moving through the end of the year as far as demand and reactions to the bond market. Can you expand on that and give us a little bit what to look for?
Yeah, and I can even take this back, bigger picture. If you go back to 100 years ago, gold was at $20 an ounce, and since then the dollar is depreciated. It's lost 90%, 97% of its purchasing power, and gold has gone from $20 up to where it is today, almost $1,900 an ounce. And if you go to the present right now, in the last 3 years, gold and silver have been going like sideways, and a lot of people are frustrated. Some people are frustrated, and if you look at the bigger picture, though, gold and silver, they always go up. And right now they're soft, a little bit softer in prices, and people are disappointed. Like I said, the reason is because the prices are manipulated by J.P. Morgan and other banks, and that's a fact. They've been, many traders now are going to prison. There's hundreds of millions of dollars that have been made by these banks, but they're getting fined for it. It's proof that it's happening. So the good news is that they've been, because the prices are low artificially, all the big boys, China, India, Russia, all the major central banks, they're buying as much physical gold as they can get, and silver. And it's sucking all the supply out of the market. So you've got a situation where long term it's very bullish. If you're in gold over the last 100 years, you make money. It's guaranteed you make it. It's over time, long term. But short term, it's very, very oversold, and it's a good time to look at this. You might want to expound on this, Joe, but the public sentiment right now is very weak. And usually when the public sentiment is weak, that's when you want to go in and buy as much as you can.
Right, with the pullbacks, yeah, people have lost a little bit of interest like you've mentioned, but right now with this window, it's as good as time to any if you're thinking about getting into the metals markets. Protecting dollars, preserving assets is high on everybody's mind right now, and the outlook for metals is, it's going to continue to be a safe haven. We're going to continue to climb in pricing definitely through the end of the year. An example of this, Tim, is silver being highly oversold. Can you dig deeper into that?
Yeah, it's just like I said before, the markets, the prices, paper prices are being pushed down. All the physical is being sucked out of the markets. All the inventories are lean right now, especially for silver. And you've got a situation where the demand is worldwide is greater annually than the supply now. And that disparity is going to grow and grow and grow. And one day, given everything else that's going on as well, geopolitical, inflation, all the anxiety we've got in this country, this is all going to hit. And when it does, especially with silver, when silver goes, it goes fast. And if you're not in it, you're going to be chasing, like a greyhound, a dog. It's going to be going so fast and so furious. So you want to be prepared now. Take advantage of the artificially low prices and the fact that supply and demand is very, very bullish for gold and silver, and you're going to be a big winner.
Everything seems to be compounding: the dollar, inflation, geopolitical, oil. There's really no end to the problems we're kind of seeing around the world. Go to our website, request information, give us a call. We're here to help you sift through it, make sense of it all. We'll see you next week.